What's going on, guys? Brian's here, and I'm excited to finally announce the release of the new Thinkorswim script. Now, this is something I teased a couple weeks back, and it's finally available. It's called the Thinkorswim Open Interest Script, and it's actually available to anyone that's a member of the Quant Trading App Discord. So you don't have to be a premium gold member. You actually have access to it in the public section right here. If you didn't know, QTA stands for Quant Trading App. All you have to do every morning at 8 a.m., a new script will be posted right here. You just come to this channel on the Discord and click Open Interest Script. This is the link that will take you to the Quant Trading App website. So let's dive in a little closer and see exactly what it does. First, we click this, and it will bring you to the Quant Trading App site. Now, if you don't already have a membership with Quant Trading App, it'll just ask you to log in. All you have to do is click this login button. As long as you're a member of the Quant Trading App Discord, all you have to do is just press authorize, and it will actually connect from the Discord straight to the public section of the dashboard for Quant Trading App. Now, if you're logging in from the link from the Discord, it'll actually bring you to this page right here, which for the time being is just a duplicate of what's on the dashboard. And as the year progresses, there'll be a few more free things that will be added to the dashboard and a bunch of other freebies. For now, this video is really about what's going on right here. All you have to do is then click this to copy it. If you've never installed a script on Thinkorswim before, there's an installation guide right here. Just make sure you rewind back to step 1 and then just follow the instructions right here, but I'll show you very briefly how to do it on this video. What we're looking at is Thinkorswim. This is the SPY on the daily time frame, and as we can see, there are no studies currently installed. So if I just come to studies, go to edit studies, you see nothing installed right here. Now, if this is your first time actually creating a script on Thinkorswim, as you guys can see, I'm going to just type QTA right here, and this is a list of some predefined scripts I've already created. But let's just delete this and say create is how most of you guys will be starting. Make sure you type in QTA and then just put in something like custom OI, because that's exactly what the script is. It's going to plot custom open interest levels. This red is popping up because I already have I already have a script with that title. So let me just put an underscore and call it a video, just so I know which one it is. Make sure you delete everything that's here and then just press Command V or Control C for paste, because once you click it on the site right here, if we come back up, once you click this, it automatically copies it to your clipboard, and then you just come here and you paste it in. Then we press OK, and then it'll plot it right here, and then you can just press apply to see it in the background, or you can skip the apply step and just press OK. Now, what this is plotting is the top 5 highest open interest calls and top 5 highest open interest puts on your chart. Now, this is an amazing edge if you know how to use it. What we're looking at right here is we can see the thicker the line is actually the more open interest there is at that strike price. So this line being red is telling me that it's a put, and this line right here is telling me it's a call. So right off the back, I know this is the highest open interest calls for this upcoming Friday's expiration. If you're ever curious, once you come back to the site, there'll be a little bit of information at the top here that will tell you what the script is for, and as well as what's it's only valid for. So in this case, this script was generated after hours today because I'm recording the video after the market closed, but generally this will be posted, say for example tomorrow. It'll say Tuesday, January 11th, and it will say it's only available for, or it's only valid for that day, because at the end of the day, there's new open interest levels that are created. So that's why you always just want to make sure you come here and update your script daily. Now, it's always going to look for the upcoming end of the week expiration. So in this case, these levels are for this Friday's expiration. This would be the highest open interest calls, and this would be the highest open interest puts. Then as you can see, the lines, they vary in size as well as they vary in color. So pretty much the thinner it is, so this one right here, the 470 call, this is the 5th highest open interest call for Friday, which in a sense is not much, and that's why it's pretty thin. If we scroll down here, we can see that these are the puts at the bottom, and the reason they have high open interest is because these are the calls, or these are the puts that are being sold the most by market makers or any other type of option sellers. But for the most part, majority of the option sellers in the market are done by market makers. Now, to keep things simple, yes, you can use these as your traditional support and resistance lines, but how they can help you really build big trades is just to know that the market is generally not going to want to go past the very thick levels, especially if it gaps down into it. So as we can see, the SPY gapped down today, and it actually sold off below 460. Knowing this type of information made it very easy to anticipate that the market would reverse today, and it would want to close at least above 460 by Friday's expiration. Now, again, tomorrow, this script will be completely knew. So you would just copy and paste it in, and you'd be able to see if this level changed or if it adjusted as the week progresses. But for the most part, the weekly levels don't really change that much, just because the open interest doesn't tend to vary that much throughout the week, unless there's some sort of major catalyst or some sort of major news event or something like that. So looking at this, just at a glance, I could tell that the market is going to want to close between 460 and 475, because that's where most of the calls and most of the puts would expire worthless. So all of these calls right here are going to expire worthless if the market closes below this strike, and all of these puts are going to expire worthless if the market closes above this strike. So pretty much above this and below this, and kind of in this zone right here. So if you're an iron condor seller, this is already great information to know, just to be able to see it visually on your chart. Now if we jump to something like the QQQ, let's take a look. And now what we're looking at is the QQQ, so the Nasdaq. And this right here, you can already see that the market gapped down today right here past the majority of the puts that were sold, and this was the last most highest open interest put on this week's expiration, the 370. When you know something like this makes it a very easy trade to actually go long on a day like this, especially once it gets close to 370, because if you know anything about the way the market works, specifically the options market, whenever there's a lot of puts being sold, it's generally in the option seller's favor for the market to actually close above those levels, because that's the only way the market makers will collect on the premium for having sold these puts. And it works on the same end. If the market was to blow past these levels, that's going to be very dangerous for option sellers, and it's more than likely going to want to come back within these ranges. So we can see the highest open interest call for this week is the 400 call, and the highest open interest put is the 370 put. So the market hitting 370 today was a very easy indication that you want to be long tech. Moving right along, let's look at the Dow, so the DIA. If you see something like this, now looking at this, there isn't really much of an edge here, because if we take a look at where price was today, it's very far from the highest open interest call and the highest open interest put. So this is pretty much just something you probably want to leave alone. You want to take a trade if price is somewhere deep below the puts or at the puts. It makes it very easy to go long. And if price is really past any of these high open interest calls, you pretty much want to be looking for short setups. So let's keep it moving. Let's take a look at the Russell for a second. And again, all of these tickers, the four indexes will always be included in the script for free. If we move right here, we can see the Russell. This right here, I got pretty excited. Yesterday, I was actually looking at the chart when I was analyzing my plan for the week. And the Russell was pretty exciting. Just understanding it. Look at all the highest open interest puts right here, right here, and right here. Now, what we can take a look, the market being with the Russell being here, it's actually below these three open interest puts. And yes, it did not cross below these, but the fact that it's within all of the highest open interest puts is pretty much in the favor of the option sellers for the Russell to close at least above 218 for this week, and definitely going to want to close below 230. But now if we take a look at this from a risk reward standpoint, with the Russell being below here, yes, we can see on the chart. Now you guys can already tell these levels will work as amazing for support and resistance, and the intent behind creating a lot of these scripts that I've been working on is to take away from the time that traders spend so much with technical analysis and drawing out support and resistance lines and trend lines and all this stuff, where a lot of that is not really where traders are struggling. It's really understanding what's going on with the market, having conviction, as well as understanding proper risk reward and trade management. So if you have a script like this that's actually going to plot really strong levels on your chart, you can actually just sit back and kind of formulate a plan to decide what you're going to do when price is at certain levels. And I think that's something that will really help a lot of newer traders advance in their careers. So looking at this again, I'll do more dedicated videos just explaining what's going on. If you haven't seen, I did a video actually when I went long on Tesla back in October, and I made over 900% on that trade just from understanding where the gamma squeeze was likely to occur. So in this case, let's just say the Russell for whatever reason was to gap up tomorrow over 230, and it held above 230 the first 15 to 30 minutes of the day. That right there is going to trigger a very strong gamma squeeze, because all the people that sold calls here and here and here are in significant trouble. So they're either going to have to start buying shares to offset their risk, or find some other way to hedge themselves. If you've ever been on the other end of selling naked options, I can tell you it's something that's very dangerous if you're not properly protected, and that's why these levels will come into play very strongly. If you sold this call and the IWM gapped up over 230, you are in trouble, because this would be a crazy gap. Now, this is not going to happen on something like the IWM because it is an index and it's very difficult to do. So let's move on to some independent tickers where they are likely to gap because of news or other catalysts. Here we have Apple. There's not really at a first glance much of an edge here because as you can see, everything is pretty, balanced all over the place, but we can take a look at this right here. This information is how much premium is in the calls for this Friday and how much premium is in the puts. You guys can see that this is pretty balanced. Whenever I see stuff like this, I don't think there's much of an edge when it comes to just looking at the options market. So I wouldn't really look to take a trade off of this. However, it is interesting that there's no higher open interest strike prices, calls or puts below 170. So that is of significant information. So knowing that, you can say, hey, if Apple, open up below here, you can say if it got over 170, you're going to take the trade long with the stop below low of day with the expectation that it's probably just going to close somewhere between here or here by the end of the week. So let's keep it moving, see if we find something a little bit more interesting. Here's Netflix. So this is a pretty exciting one because as you guys can see, it's pretty much at the end of the chain in terms of the highest open interest puts. It's deep in the money on all of these puts that were sold except for this one. It's in the money on the highest open interest put, and yet all the highest open interest calls are way up here except for 560. So just glancing at this chart, and then we have this pin bar right here. We have earnings coming up. This is an exciting chart to me, and I would be looking to take a trade long to at least over 550. And most of my trades these days are swing trades, so I'm looking for really big trades that can really go the distance. I'm not really spending that much time day trading or scalping anymore, as I'm looking for these types of setups. So this right here, seeing that the highest open interest call is at 600, you have to start asking yourself, can Netflix actually make it up to 600? With earnings coming up, we've seen what has it done the last time I was here. It was actually able to make a run like this. So you want to then look for other confluences, take a look to see if you see something else that would help you try to build some sort of a bigger trade. I don't have any other indicators on the chart here, but maybe the 50-day moving average or the 200-day moving average or any other way you trade. I already always get excited whenever I see these types of long wicks on a daily time frame. Earnings coming up, it's at the bottom of support, and then you have something like this to show you that it's actually in the option sellers, which more than likely are the market makers. It's in their favor to actually have Netflix kind of stay above this level and stay below this level. So anywhere in this range ends up being a good profit target, and we're kind of at the bottom of the range. So this is definitely something you're going to want to have to come on watch, at least for this week, because that's the significance of this. These are just the levels for this week. So if you're going to build a longer term trade, you'll need to know the levels for next week, which is why you'll want to update the script every day. And then over the weekend, you'll want to come in and also update the script because it will always be using the levels for the upcoming Friday expiration. So let's keep it moving right along and see what else we find. I'm going to go over 3 more tickers. So this is Amazon. Equally, look at how beautiful this was today. Amazon gapped down, as we can see, but then sellers were in control for the whole morning before buyers ultimately came in and started driving price up. This wick right here is also exciting, but take a look at this. Would be the highest open interest puts, and then we also have the 3,000 put right here. So it was very unlikely for Amazon actually to sell all the way off to 3,000, but just knowing that it was at 3,150 after a gap down, after a huge sell-off, this made it a very easy dip buy. And again, these levels are automatic, guys, so you really don't even need to spend the time trying to plot every single level on your chart. Just pay attention to what the option sellers are expecting to happen, and then kind of take the trade alongside them, because this is essentially what big money is doing. We can see right here there's a lot of premium inputs, so 2.3 million for this week and only 588,000 in calls. So the way this is towards the end of the week, this number is going to want to be more balanced, because the more balanced this is, it means the more premium that the market makers collected. If Amazon was to keep selling off, it means the amount of premium in the puts would keep increasing, because now the puts in which they sold are starting to become in the money, and that's not something necessarily option sellers want. That's probably the 3rd or 4th time in which I've expressed that in this video, but I just want to make sure it's really driving the point home here. So let's keep it moving. Now we have Facebook. Equally, let's see what we see here. Another long wick, again, highest open interest put. Here's another one to 300. It was not likely to hit 300, but if it did, this would have been a freebie to buy this week. But we can kind of read this and say Facebook is probably going to want to stay above 320 this week and probably below a 340. We have 350 up here, so if you're taking calls, you can probably swing the 350 calls. If you find other confluences or another setup, your profit target would more than likely be 340, because at 340 is where it might might start reaching some sort of resistance. This is also beneficial if you were to run some sort of debit spread. So if you were to buy the 340 call and sell the 350 call, then you're in some sort of debit spread. If you're doing put credit spreads, then you can short the 320 put and buy the 310 put with the expectation that Facebook is going to close above this level. There's so many ways in which you can use this. And again, this information is available on the options chain. So it's not that it's necessarily some sort of revolutionary way to be able to access this information. What's different here is the ability to actually see the levels on your charts. And for most of you guys, I know you guys spend a lot of time looking at your charts and less time actually reading the options chain. So being able to visually see this should help a lot of you guys spot some much bigger trades, as well as be able to understand greater context what's happening. So here's Tesla. We'll close on this one. We can see that here the 1000 puts and the 950 puts. So more than likely there was a lot of open interest here, because this put was probably sold, this put was probably bought as some sort of spread, or there was just a ton of the 1000 puts being sold and even more of the 950 puts being sold. And we can see the 1200 call has the highest open interest, and then this one. So just reading this, it looks like Tesla is more than likely it's going to want to close in between here, but if it breaks past 1100, option sellers will probably not be in much pain, because this is probably the call in which that was purchased to offset the risk from selling this call. And we can see that this one is pretty tiny here, so it's not super significant. But imagine being able to see this at the start of today and knowing that these were the levels below. You would just be reading this as anywhere in between this level here would be considered a good buy. And granted, you try to find some sort of other confluence, so maybe you have a support level here or some sort of gap or something else, whatever other technical reasons that you use to take your trade. Now, anyone that's in the public section, as I mentioned, you guys have access to this. It will be posted here automatically from the algo itself. You'll just click this link again. Once you log into Quant Trading app, you'll come in every day. You can either click the link will just be a reminder, or you can just come here at 8 a.m. every day and then refresh this page and it'll actually have the new one. So just make sure it says it's only valid. If you're updating the script, so assuming this is tomorrow, all you'd have to do is just click this, come back to Thinkorswim, go to your studies, go to edit studies, and all you have to do is just double click the scroll and then delete everything here, and then just paste the new one and then just press OK. So it's a process that should take you less than 10 seconds every day to update. And again, the significance of updating it every day is because the premiums will update every day, as well as if there's any changes in the options chain, you want to get the fresh levels. So that's why it's going to be available from 8 a.m. So you have an hour and a half before the market opens to just come in, copy, and paste. For those of you guys that are premium members or anyone that's in the public section wanting to know if you have access to more scripts, that actually is available for the premium members. So this is what it looks like for us. We can actually come in and change what type of script we want to be created. If we wanted to plot the highest premium levels on the chart, the highest option volume on the chart, we can actually customize it a little bit more and choose different expirations. So let's just say we wanted to get the monthlies. We just had to press that right there. Any type of tickers we wanted. So let's just say there was an ABC stock, or maybe Quant, or maybe there was I haven't been trading many random stocks these days. I trade the same watch list. So let's just say there was XYZ. All I'd have to do is just click those 3 new ones, and then as well as these are the ones that are built into the Quant Trading app ecosystem already. So we can just click. So let's just say we wanted information on Zoom and Airbnb, AMD, we'll say Coin, Neo. If these are the tickers that I'm used to constantly seeing, all I have to do is just save as default, and then every time I come to this page, it will load it up. But I want to just load back up my personal defaults, so I'll just refresh it. If I press reset defaults, it'll just bring it back to the 4 indexes. And as you guys can see, if I load my settings, those were some of the main tickers that I was using to demonstrate it. And then we can actually customize the colors and things like that. So we can change this to blue, or maybe the highest open interest call, which would be the one that we really want to pay attention to. We'll just make it white, and maybe the highest open interest put, we'll just make it black, so that way it really stands out on the chart. Any which way we want to customize it is very simple. So let's just press reset defaults, and actually let me just load my personal defaults, and let's just go back to the monthly right here, highest open interest, and all we have to do is just press this create study script, create study button. Just going to take a few minutes, and then we have this right here. So these would be my custom symbols, and I can add up to, I believe it's 30 before Thinkorswim starts getting slow. So I would click this, and then I can, customize it. So that's just a little bit of preview of one of the features that's available for the gold members. But for everyone else, again, for right now, this is more than enough to get you guys started, and I'm looking forward to hearing some feedback from you guys, how you're using it. Feel free to post some screenshots in the public section if you ever have any questions. If you see like, hey, the SPY has hit this level, what should we be thinking? If you have any questions regarding what you want to look for a trade regarding this script, again, just to help you guys get started and understand again how you can use the options open interest as an edge, I'll be willing to help you guys, and expect a few more videos on this subject matter. So let me know if you have any questions in the Discord, and I'll catch you guys later.